Okay, hi there, guys. Hoping it's all coming through clearly. Just let me know if you can hear me clearly there, guys. Then we'll get up and running. It says the stream health is a bit low, but my streaming program is saying it's fine, so it's a bit strange. I think YouTube have a few issues sometimes. I'll just close down a few things just to eventually free up some space. That's probably about all I can close down. Okay, we all good there, guys? We're having a few issues getting through. G'day, John. Hi, g'day, Helen. Looks like only a few people on today, so just checking. I was playing around with the streaming the video and everything before, and it looks like maybe I've stuffed something, but it doesn't. All looks good actually. The settings all look good. All right, no, that's good. All right, let's just get stuck into it then and see how we go. All right, welcome to TradeSetup and a live stream. It's what have we got? The 22nd of the 3rd, so 22nd of March. Markets I've been a bit weak today, and then they've bounced back. I think we're just above up 1 or 2 points at the moment, so down 30 or so at one stage, I think. So not too bad, actually. A good little bounce, but not much happened in the US overnight. I mean, there was nothing unexpected at all. They had the interest rates rise. I think all they were really looking for is the statement to see what they'll talk about with regards to rates, 3 or 4 more for this year. I think they're sticking to the guns with another two rate rises for the year to make three for 2018. Not particularly four, but they are, I think, have extended their interest rate rising outlook. So, meaning that they've projected them a bit longer as inflation grows and as the strength of the economy grows, tax cuts in the US working their way through the economy. So, g'day, Ryan. Um, so, I think there's a few things. Stream House. What's going on here today? Hmm. Well, just let me know if we do drop out, guys. If just put in the chat. Anyway, so yeah, talking about the rate rise in the US, probably the inflation is going to the rate rising, well, I guess cycle. They're looking projected out a bit longer than expected. So, and that's good. That's good for the economy. Probably good for stocks that things are more contained. If inflation gets out of hand, that's what's going to kill probably put a lot of pressure on this. With selling through the US stock market, and in turn, going to put a bit of pressure on us. Anytime the US react down, so do we. When they react up, we struggle. So, a bit negative towards the old ASX at the moment. But yeah, if that's more controlled, inflation's more under control, and they're not getting out of hand with rate rise, everything's well in place. That should be good for the stocks over in the US. So it should be in turn good for us. Let's take a look at the market now. Let's just get straight into it. See if this comes through okay. Maybe there's a big lag. Nah, look, it looks okay. All right. Let's go start off with the indices. There's not much to talk about, I guess. The S&P, SGS&P, it's still, holding high lows. It's at that spot now where you'd think if it was going to go up, the S&P, it'd hold a higher low here and probably get a bit further contraction. But the thing is, what we could easily do here, the bulls could take control for a few days, push it up, but build a lower high below that 28, and then I think you might start to see a bit of pressure on the downside. But until then, I think to get this sharp sell-off from here and just to tip over, as the bears would be spruiking, is it's more, to me, it's more triggered by your fundamentals of what's happening in the US, trade wars, all these sorts of things. There's a lot of things on the cards over there that could put pressure. Um, i.e. your trade wars. We've got Facebook obviously in a bit of the shit at the moment. I don't know if anyone's looking at that. Well, not full screen. Good idea. If I do that, that should work. Yeah, so I think the Nasdaq and your tech stocks, which have really over the last year or so, or they've been a really driver for this bull market, and they look, higher regulation might put a lot of pressure on them, and that might mean there's a bit of selling coming into the S&P or over in the US anyway. If the Nasdaq starts running out of steam, your big darlings like Amazon, Facebook, where else you got Apple, all these sorts of guys, probably not Apple as such, but Twitter, um, get regulated a bit harsher, then that might put the handbrake on the Nasdaq a bit, which probably in turn puts the handbrake on the US rallies, and you might see a bit more contraction or a bit more choppy price action. And I know a lot of people are talking 2018 is going to be a bit choppy, purely because you headwinds of rate rises, and the market has gone so hard. It's gone up so hard. Um, Look at the weekly; it's better on the weekly. It's sort of gone vertical, and then you might get a bit choppy. We might take out that high low, just around that 25. But again, only time will tell. All we can do is play with what we see and what we get given, I guess. All right, that's the S&P. The Dow's pretty much the same story. The Dow's actually probably not looking quite as good, but you got to say no. Just take note of the actual price action too. Why I like to say, I'm thinking more about contraction than anything else. Is just you're seeing a good hard move down, a bit of a reaction here, took out the low, and then a reaction straight up. That reaction up was pretty much made of 6 green candles, up, 2 down, another 3 up. So then washed out this low and then bounced back. But you can see it's always sort of, you can break it down into a couple of moves, but the move is getting a bit less. This move down is 1, 2, potentially we're starting to pop up. So that's getting down a bit less. So the sellers and buyers are coming more to a point of agreement to me than anything else. If it's going to get triggered, it could be, trade wars that they're talking about. If Trump comes out and starts placing tariffs on Chinese, and the Chinese in return retaliate with what do you call them? Tariffs on the US. I think mainly the agricultural soybeans and things like that. Um, then yeah, eating its margie bargie, that's going to cause concern for the overall market as they try to figure out what's going on. And of course, if you get anyone sitting on profit, rather than figure out, you rather figure out from the sidelines than stay into it, stay in your stocks. So that's probably what's going to cause a bit of a sell-off, if that's what's going to happen. And that's what could put pressure on the downside, could be that trigger. Otherwise, like I said, I'm just more lean towards higher lows, lower highs, just compressing the market a bit until everything works itself out. Unless, no news drives the market lower, that's all. Now we got the XJO. Well, let's start FTSE again. FTSE's heading south a bit. It's not looking too great. I mean, on that weekly, it's getting overextended down here. It doesn't mean that it can't just continue lower. So I just have to keep, if you're trading the FTSE, just keep an eye on that. I mean, it's not doing, there's not much too much to look at. It's holding lower highs, so really pressuring that market. It could turn around and just bounce straight back up because it does that a bit. You can see lower highs, boom, straight up, lower highs here, and reacts up quite strong. So that's just the nature of the market. It looks like it will just load up on the short side. You get all the short sellers diving in, all the bears, really trying to pressure that market down, and they turn around and get squeezed straight back out again. But we'll see. What else we got? We got the FTSE, the DAX. That's not as bad as I would suspect as the FTSE. It's holding through this support zone around just below 12,000. Of course, you got on the daily, you've got these lower highs still pressuring the market. That could push down, build a higher low in here at 12.1, and then boom, up we go again. Again, the markets are all, it's probably not really broken the longer term, the weekly uptrend. It's still that, for me, that anchor level's around that 12,000, just below. It's tested there with this move down, but that was that sudden, catalyst in the US selling down, reacted off that zone. We'll just see if that that can build some high lows or contract. We're always looking for markets to go into contraction, sorry, from contraction into expansion. So that's ideally what we're looking for. Contraction would mean lower highs pressuring and higher lows pressuring back. So it's that point of agreement between buyers and sellers, and we're looking to take advantage when the market moves out of that point of agreement or out of that contraction into expansion. And at the moment, there's, with the DAX, for instance, the selling's coming into it. We've got a lower high, still pressure. It broke that recent low, but it's still around that longer term zone of just below, say, 11.9, 12,000. This could be a wash out of that zone, and it could easily just buy and then pop back up out of contraction. But still a bit of work to do, and we are over. You can see the stochastics, the pressure or the buying pressure to push it up didn't quite reach that previous high of around that 12.6 mark. We fell a bit short of that before selling, a bit of selling come in. But again, when you see selling that's more, I should draw it up. What I mean, when you see the sellers, it's like this, more controlled, and then you've got reaction up quite hard. You might have had this action down, reaction up quite hard, and that when it's gone from overbought up here and it's more controlled like that, that's not a very strong, well, a very negative market, if that makes sense. So that's where I'm always looking for that type of thing until the selling pressure runs out, because that's more inclined to believe that buyers are starting to soak it up on the way down. And if you start holding higher low, then you'd expect this kind of acceleration back up again. So that's what ideally I'd be looking for on the DAX if I was trading it, but I'm not. So XJO, again, it's that 59 zone. It could be a bit of this price action. It starts to look like it's edging lower, then blasts back up. And that just catches what the market's doing, is prepping the shorts to catch them off guard and squeeze them back out. And they've got to chase their tail on the way back up. And other, traders who may have missed the boat on stocks are chasing it up. Anyone that's been short the market is buying the position back to squeeze them out as the market heads high. So we could be, the ASX could just be prepping that. I'm not overly negative just because we've got lower highs, because we've still got this good reaction, this move down. We reacted quite strong, and then we've got this extra selling. We've got some buying coming in. So it's looking more like contraction to me. If this can't hold up 59 and we head south, okay, so be it. But we could still pull up short, like we spoke about, I think, on Monday. Pull up short of that 58, still hold the weekly trend up, and then on we go again. And that's probably going to be a perfect scenario on the daily basis, to squeeze, to bring in some more short sellers, some more bears, and then just turn around and squeeze them back out again. We'll have to see. So I'm just going to close down this here, and I'll get back up again. Looks like it's mucking around with me. I probably haven't got a good connection. Just bear with me 1 second there, guys. We're all coming through loud and clear. All right, there we got that. And we got that. Lo and behold, it was just my YouTube channel got stuck. It was frozen more than anything else. All right. So where were we? Just on the ASX. I don't mind this big rejection candle like we're getting today. I mean, look at that. Look, there's buyers stepping in, but it's the unknown between buying and selling. There'll be people edging out, people edging in, argy-bargy between the buyers and the sellers, but we'll see how it goes. We've got probably a range of people. We buy short, long. Who's buy short on this, or who's expecting a bit more of a sell-off, or who's hoping for a sell-off to pick up some cheap stock? I wouldn't be betting on that, obviously. There's times when you can load the boat, and there's times when you probably shouldn't. I wouldn't be loading the boat just yet until we start seeing some of these lower highs. But I think we've got more of a squeeze, more contraction to see before we start washing out some of these lower highs on the upside, if that's going to happen. If we start getting that price action, like this pop up, takes out a couple of these lower highs, then the market's it's starting to trend up. It's swinging from more of a contraction or an uncertain market to more of a bullish market, and that's where you'd be looking to load up on if you're into your stocks, loading up on some good quality setups. There's still a lot around at the moment. All right, let's get into it. Just let me know, guys, if you're long or short. We'll have a bit of a chat about it. But otherwise, I want to talk. I think There's a good example. Um, I'll flick it over to the euro. I've just got to find my chart. So I want to talk about the euro because, yeah, I tend to agree with you. I'd like to see it. I tend to think, let's just go back to it. Where are we? Where do I have it? I tend to think this is going to wash out these lows. I don't think it'll take out this 58. I think it'll more clean out that lows, and then maybe we'll see a bit more contraction. But it's getting so close. There's still pressure on the downside. There's still problems over the US to deal with. Trade wars, Trump sacking everyone in his cabinet. Um, what else we got there? Pressure from rising interest rates, inflation, but still, I mean, that's good and bad for the economy. Good that the companies are growing, but they're up against higher interest rates to deal with. So there's a few problems over in the US which could cap it a bit. But yeah, I think the longer term, the weekly, I don't mind at all. I still believe this is going to be a higher low hold, but we might get that choppy action testing towards 58, banging back up again, just choppy, maybe a bit like this. Like I said, so it'll be interesting to see how it plays out. I was going to talk about the euro. I just want to talk about, while we're talking about squeezes, and I thought it's interesting because I know there are a lot of people you've turned negative on the euro. That's not the euro. Um, there's a few things to look at. Well, for me anyway. This is the daily. I mean, that to me is an ideal pattern starting to build. We potentially are just holding that higher low around that 122, and you can almost guarantee yourself that there's a lot of shorts have been building up through there as we get retail traders or people loading up on the short side, expecting that euro to fall, trying to pick the top, all sorts of things. So there is, I know there's probably more. Well, the sellers at the moment are still outweighing the buyers. Not to say they're going to be wrong, but I'm just going to say there's a lot of fuel there to get squeezed back out again. Gold relationship, yeah. All right, so just with who's into the euro, who's into the currencies anyway? Who in here trades them a bit? And what's your take on the euro? I know there's a few people in our forum that will talk, will chat about the currencies a bit, and shorting the euro and things like that. I mean, the daily trend is up. There's no doubt about that. We've had the markets moved up, we contracted, started holding higher lows in here, pushing up another higher low. So we got this secondary leg up. This looks like it's contraction. We could easily hold, below this lower high at 124.51, say. Just draw that up. We can easily hold below that lower high and then press down, take it this high low. But it's just looking the way we've gone and the way the US dollar is going as well is, delete that. Whoop, get rid of that. US dollar seems to be reacting lower, and it seems to be settled pretty much factored in 3 rate rises this year. US dollar heading south. I don't know exactly why, but that's been the general trend of things. When it's reacting high, if you're talking up inflation in the US, the reaction to the US dollar is just to squeeze some of those short sellers out. But I know that I'll just go and find some data. That I think the number of weekly short positions has been building up on the US dollar. I mean, that could mean that they could turn around and squeeze the US dollar, and US dollar heads high, euro heads south. But there's also a lot of short traders built up on the euro. And just looking at this, I think this is primed and ready to set up for a bit of a spike and just take out some of these shorts that are built up through here, maybe spike up right up into resistance. And I think this resistance is more longer term. If you look at the weekly, it is getting a bit, overcooked. Whether or not we can put much into that, because it is a longer term trend, it has had a good run up. It could easily get up to, look, it could easily just bust straight out and head right up to test that 139 zone. Who knows just yet? But just at the moment, looking at the lower time frame, the dailies, knowing the number of people that are built up on the short side, this market could easily turn around and squeeze them back out. So I think you've got to be really wary of what setups you're using and what charts you're looking at. To say this is a short just yet, I don't see a time frame where I'm looking short. This is more of that contraction. It's that macro corrective action lower, and then it could easily pop back up. What about the 30? That's a 4-hour chart. Look at let's go to hourly. Hourly's just popped up through this lower high. So this could easily put the squeeze on. If this builds up, up to that 124, has a bit of a pullback, that'll drag in. Obviously, people will look at that level and go, I'm selling off that level, selling off resistance, jump in, push it short, builds a higher low, and then that could turn around and squeeze a lot of these people that build up short over the longer term and have been holding it for days and days or even weeks, really putting the squeeze and putting the pressure on them. So yeah, I think it's a good chart if you get a bit of time. Just looking at the charts of the euro to see what price action. I mean, this is not weak price action by any means. You've got to push down a good reaction back up, not far from the highs. It builds a lower high, pushing down, taking out the lows, not by much at all, reacting back up. Quite savage reaction both ways. Not savage, but quite strong. It's not conducive to a really, everyone buy short, for instance, and it's popped back up here and then it's taken out the lows again just here. But not by much, and it's reacted straight back up and washed out this lower high. So to me, that's more not so much indecisive, but it's just not strengthening selling, and this any sort of selling's been soaked up by the buyers, and you know that they do that time and time again, and they'll squeeze in, drag in some selling pressure, and then just turn around, and all that is just fuel to squeeze them back out and move up. So just be wary if you're trading the euro, but it's also good just to take a look at the charts, just to get an idea of what could be playing out. Comparing it with longer term charts, when you've got some clear resistance up here, so you're gonna be certain that there's going to be a lot of short positions stacked up here. You're probably going to another level just here where there's going to be short positions. So you've got a number of resistance zones where if it gets through there, it's going to trigger some buying and squeezing of these short positions. You've probably got some just to pop through here. And if we pull back and build that higher low, bang, you expect that to get squeezed, then this level to get squeezed. And that could be enough to really take out this high at 125 and just extend on the daily chart. And then it could potentially roll over from there. But we'll see. I just thought I'd point that out, guys. Let's get back to, say the ASX is just starting to roll over. We're down one. Just look at intraday. Look at that. That's the 30-minute of the XJO. What do we got here? Let's not look. If you just look at this last price action, I'll draw that up. The key sort of levels, what I see happening. So I'll get rid of that. I just want to go back to that. Go back to the daily. You've seen some key levels through here, obviously. So you've got this like pop up, pull back. This is on a daily. You got a lower high here, and it's just starting to find a bit of a base. If you can go down to the half an hour, every now and then, just take a look at it to see what's happening. That half an hour chart, we could easily just squeeze up through this high and then get to 6,000 and roll over and build that lower high again, and then squeeze out this low. But just looking at the 30-minute chart, sort of always watching to keep an eye on what's happening here. You've got this good move up, good strong move down. We've got this reaction up. All right, so this is, sellers well and truly in control here, and then a big reaction up. Sellers started to try to take control again, didn't get much further than, say, it was about 59, give or take, 5,900 zone. They tried, it's pretty much retesting those lows, and then it's had to have a deeper correction. So if the sellers want to take control, and if all the bears are trying to take control and push the market lower, then that first initial, so you've got this move down. Okay, they've given up there, bought back some of their sold positions. It's had another crack lower. They found out they couldn't get through those lows. They fell short a bit, so they have a deeper correction. And then we've had this, another move lower, which is again, I'll just take that back a step. Again, it's fell short at 59.10. And then we've had that corrective action higher. We've had another dip at it, push down here. And we're having another go. We're just reacting back off longer term. So we've got a low around at 50.90, then 59, higher lows. They're only minor, but you can see that the buyers are starting to edge in a bit higher. If we take out this 59.80, that's where I'm expecting it to probably potentially just push up to 6,000, maybe retest that high, and then just see how it goes from there. If it can't, and still the sellers keep in control, they keep testing those lows, these buyers that have been buying it through here could easily get squeezed back out of the market. So not bad. Just taking an eye on to see what the intraday action as well, to see what sort of buyers and sellers, what the interaction is between them. If you get to the SPY chart, it's actually quite an interesting chart too. So it's just come down in some, basically when the market ASX touched down around that 59.10, it's hit right in some support zone. I can't remember what it was, what the figures are, but bounced straight off that support zone, reacted quite hard off that zone too. But it has, in all fairness, it has built that lower high. I'm looking at the 30-minute time frame on the SPY anyway. Let's just look at see what we got. So I've gone through, oil. I just want to touch on oil because I know I'm finding it an interesting market too. Get rid of that. Who's been watching oil? I know someone has. I just can't remember who it was. We were talking about it yesterday on the forum. Anyway, crude. So you can see with crude, I think the price action is actually not too bad at all. I think it looks quite nice. Let's have to go back a bit. Now this is, looking at the overall, the longer term price action on this, I'll draw it up through here. Just put a few lines, stuff of interest on it. So if you're a bear, just be careful, in all honesty. So you've got this market that's popped up. What do we get? 140. I was trading options all out there. It's beautiful. Got caught a couple of times here though. Oh, I got caught before that. Anyway, that was quite a good little market. That market's popped up. You got to the highs. I think it was the all-time highs above 140. Big sell-off here. What the market's done is then pushed up, got a bit choppy up towards those highs. It was around that 110, 115 mark, and then you got this lower high, and you can see that quite clearly rolling over, pushing all the way back down just to wash out these lows at around that 30 mark. But what we've done since is just started to hold high lows, high lows as the market presses up. And what we've just done recently is just really wash out that 60, it's around 62, give or take, wash out this key anchor, which is really the anchor to this trend down. As you can see, the market's it's sold down hard, and then you've just had to have that bit of a pullback, bit of a correction, and we've had that secondary leg lower, and then we've taken out that anchor just recently. But if you go back down to the right-hand side of the chart, just to drill down in the most recent price action, which we'll do. So just bear in mind, we've just pushed up through that that resistance zone. So if we are looking to just draw it up, if we're looking to more of a wash out of that zone, you don't want to see the price action we're seeing now. So if you're a bear and you're expecting this, okay, we're going to sell off for whatever reason, just bear in mind we're about 62. So that major resistance is through 62. We've pressed up through it. Now, if this was a washout, you would have expected this kind of action and then boom, straight back down again. So what that does is going to drag in some buyers with this, longer term buyers go, it's broken through 62, let's buy it, long-term breakout, it's going to continue on, so on and so forth. And instead you get this lower high and then you get the market pressing lower really to squeeze them back out again. Instead, it's done the exact opposite. So we started seeing the market pull back of this trend up, this whole full trend up. It's more contracted in. It hasn't really built that lower high. It's not a major correction. It's more of just contraction. The market's got a bit ahead of itself here, spiked up through 62. You know, there's probably people bought it on the way up. Just buy it on longer term breakout traders, however they want to trade it. Pull back, held that trend up, popped up, built that lower high. That's probably brought in a few sellers as well. Pulled back, built another higher low. If I just clear this out, probably make it a bit clearer. Pushed up here, pulled back, built a lower high around that 60 mark, and we've just extended that. So there are a few factors too with crude. What is it? Venezuela, probably, I think it's Venezuela, potentially cutting output, which is going to put pressure on, I guess, buying pressure into the market, bring buying pressure into the market as you got output dropping. That's from OPEC. And then you've got, probably a few issues in Iran. And what was the other one? I think it's Saudi Arabia and tensions over the Middle East, which could cause a few issues like for supply of crude. So that really, a lot of that's just bullish, straight bullish, and that's why you've got the last couple of days have pushed up. Now, if we get through that high, okay, if we start extending up through that high, you might get the same sort of action, and then boom, off we go again. But that's what I'm looking at for crude, and it's purely the last few days. If this was a bearish market, we would have expected this lower high to hold and really push down and break this longer term trend up. Maybe have more of a macro correction and then start to build. But instead, it's just popped straight back up. Nothing to say that we can't roll over from here and we still hold below this major low high at around 66, but continue this trend up and just keep squeezing, drag it in some more sellers, then squeezing them back out again. But it'll be interesting. And if you go and look at, say, there's a few companies that come on our radar, STO, was it Woodside as well? Um, a few of those are starting to show some good signs. Let's just get over, well, STO. If you look at that on the weekly, you can see it's obviously been smashed down. His reaction up, tried to go again. It couldn't get down to these lows, picked up, lower high, pressed down. Again, had a crack at those lows at 3 and started to lift. And we took out this high at around $5. But just recently, over the last few weeks or couple of months, we've been holding around that 5, probably oscillating above, beyond, above and below, just oscillating around that level. So if you crack it down to the daily, you can see it's sort of 1, 2 legs lower. We popped up. That should have been a lower high. If that was a weak market, you would have expected this low around 470 get taken out quite easily. But instead, the selling pressure to bring it from 520 down to 480 was quite hard. It's gone from, fairly pretty much overbought to oversold. It couldn't get through that low, and then we've reacted back up again. Thing is, we're getting back to sort of that oversold territory, but we're starting to get back into these highs. So it's starting to show signs of either consolidation or building for a bit of a move. So if we start getting a push up through 520, a pull back to build a higher low, and you want to see a higher low, the top third of the move, if I'm making sense, when I say the top third, so if you've got what do we got here? So we've got this move up. If that's your move up, you don't want to see, oh, that's very pathetic. You want to see a bit of a pullback, the top third of this leg up. And if we can do that and consolidate around at the highs rather than a deep correction, that's a better sign of a nice strong market, especially if you get towards that oversold territory, 20 or 30% on the stochastics, or the way I view it anyway. If you get down there, it's taken quite a bit of effort, but you can only retrace about 30% of the move up. That's a strong looking move. And if that's a high low, and then you get it, something like this type of price action, that could really start to accelerate as you see there's shorts probably built up, squeeze back out of the market, and then you could be targeting back towards that 560, 70. Again, this is all based around crude oil potentially just grinding its way higher. And that probably, look, crude's going to catch a few people off guard too. If that grinds higher, you know that everyone's looked at the recent leg up. If I can get that back, where is it? They've been watching this leg up, so they can't keep going. It's just broken through 62. It's gonna fall over from here. So they've been selling into it. And if they start to get caught back out and we take out these highs, then there's going to be a good squeeze on. There could be quite a few people just squeezed out of the market. There's got your secondary leg higher. It's looking a bit extended over here, probably on, this is the daily anyway. So you might get that contraction before we start going again. May take a fair bit of time, but look, we'll just have to see. If it does do that, and then you start seeing a lot of these, STO, what do we got? Woodside. Look, Woodside's on its lows. I don't think it's as pretty a chart, but it's probably, I'll have to go back a step. It is well and truly in that oversold ballpark. So it could easily lift from here. So that's, if you like Woodside, it's worth a go. Just because it's been smashed down here, it's been consolidating around that 28.50 to 29.25, just starting to lift out of it. So we could easily start holding some high lows. This, for me, just looking at that sort of angle of descent down, it's got a lot of work to do. So this is, for me, not potentially on my radar. If you're going to be biased anyway, I'd be biased long on this. But yeah, I just think this has got a lot. It's not as clean looking as STO. There's another one. Give us some figures, guys. This is oil search. Sort of flicking it down so we had good run up. This is the monthly chart. Big pullback, and then we've been consolidating for the last few years. Get into the weekly, you can see, okay, it's sold pretty hard here. Good reaction up. Another good selling down to that $6 mark. Started oscillating. A lot of the market's just holding, but more range trade than anything through here. Then we held this higher low at around that 625. It spent a bit of time, quite a few weeks doing that and started to lift. And this move up here is quite a good positive move. So if you get into the daily and just looking at that weekly move down, been quite heavy selling pressure's getting soaked up around that 7, and we look potentially where the daily's not there yet. It's got to hold the high low for me, and we've got to start breaking up a good strong move up and then pull back to hold the high low. But we'll see. But that daily is, if it can lift off 7 and build a higher low from here, that'll be nice. And that one could potentially be one to have on your radar. What else we got? ORG. Again, ORG, look at that. It's pretty much a confirmed high low at 860. What's the weekly at? And that weekly, I mean, look at that weekly. It's just sort of contracting around here. That weekly trend is definitely up. Potentially this is your weekly high low at around the 825, 830 mark, 820 mark, sorry. We've got one here. I think it's got a bit more work to do, obviously. You can see the daily is going to be extended up into this high around 940. So don't mind if it pops through it, but I wouldn't be buying on a breakout of that level. I would be more inclined if it's going to break up through to see that pullback to build the higher low, and then some selling getting cleaned out of the market, or some of these buys get cleaned out, and then you can see it start to accelerate. What else we got? OSH, we just went over that, didn't we? Oil search. CTX, this one. Yeah, I don't like that quite as much. I just don't like that whipping this price action, sort of grinding higher and then quite the selling down, if that makes sense. It's still quite heavy. There's still quite a bit of pressure on the downside. So this could easily, I mean, it could just turn around and bounce from here, but you can see that the moves up haven't been too strong. A couple of acceleration days down, and choppy here, start to pick up, boom down here, did a lot of work through here, started to grind its way higher, a couple of big red candles, knocking it down consistently. So I'm not a big fan of that. APA. No, it's a different one altogether, isn't it? So yeah, I'm trying to stick with the oil theme. But yeah, anyway, anyone else? What is everyone else thoughts of, say, crude and oil? Just see. Just checking out where we are on a few of these. Blue glass. I don't know if anyone knew that we had that. We had this little pop up here, 340 cents, got stopped out, and look at it now. Boom. God, those things annoy you, don't they? All right, let's. Where was I? I was over here, wasn't I? All right. Anything else you want to look at, just guys? Just chuck it in the chat there. We'll keep pushing along. I think that's all I was really looking at talking about. Oil, didn't mind that. Okay. So we got APA. Western areas, that doesn't look too bad. If it could start to lift from here. Maybe again a bit more work to do on that. Does anyone follow Western areas, WSA? Or have got it on their radar? I mean, not a bad push down, pop back up, retest. You're working off a double bottom here. The market's lifted through this level. If it was weak, you would have expected that, this kind of move down, rather than just that choppy price action down, especially if you go to the daily, rather than this kind of price action down, which is grinding down. That's not conducive to a really weak market. So if you can start to lift from here, that'd be awesome. Look, when I'm talking about, just to answer your question on oversold, I mean, stochastics basically overbought's above 80, oversold's below 20. But I don't like to look, I know a few people, especially with stochastics, and they've got different, there's a bunch of different ways to trade from your indicators. And just remember, indicators are always lagging. There's no way around it. They lag. They always lag price action. But if you try to put, the way I use stochastics, for instance, is when I'm looking at it, if it's gone from overbought to oversold, okay, the pressure, it's more of a pressure gauge for me. The pressure of selling. If the selling pressure is not quite high, it just stays overbought. It can hover around that overbought. Every time it pulls back, gets bought back up. So the buying pressure keeps jumping in. If it comes down, there's quite heavy selling pressure when it gets down to the oversold territory. But when you put that in conjunction to the overall market, last time it was oversold, say we're looking at WSA, for example, it was oversold here. That's not saying that you don't know whether that's going to be a high low, but that you put that in the context of what's happened the last time it was really in that well oversold level. It was well below 2. Okay, we've had a good run up. We're expecting a bit of a correction. That's your daily. It's gone from overbought to oversold down here. So the pressure in selling's been quite heavy, but it's really just that reversion to the mean. And that's the way I'd rather look at, I'd rather use stochastics than anything else. MAs, I like to be on the right side of the MAs. I don't really use them. I don't sit there and go, MA crossing, let's buy. MA rolling over, let's sell. It's, for me, everything's about price action and anchors that we talk about. Um, Anyone that's been here for a while would know, I guess, would hopefully have a bit of an idea of how we view um, the price action with your anchors, people call them pivots, swing levels, whatever you want to call it. When the market's going up, the most obvious level, your swing level, is where there's going to be stops below that, and if it holds up, buying approaches it. So if the market's, I want to get a clear chart. Get rid of that. Open it back up. Just to explain myself. So if you've got buying, it's pushed it right up. Every market, that could be the weekly leg up. That is made up on the daily chart of, swing highs, swing lows, and so on. When the market starts to contract on the weekly, it might be like this. When it breaks an anchor level, so we always call that the anchor level to the trend up. It breaks through the high, that's confirmed high low, breaks through that high just here, confirmed high low, and so on. But when you get this lower high pressure in the market, the first level you're going to be concerned with is what's going to happen at that anchor level. And we always talk to, if I can draw that up properly, your anchor level is your previous high low. So in this case, it's just approached that anchor level. So then if we start seeing that the stochastics, when it's at that anchor level, it was well and truly oversold, then you've got to start looking at, okay, is it going to hold up? The selling pressure just to get it there has been quite heavy. So if we can see that the market starts looking from here to start building at higher low again from some heavy selling pressure, but it's holding up that anchor, the anchor level's holding, then you're just looking for it to kick up again. Does that make sense? But that's the way that's the way I try to use your stochastics. But if you get, as a different example, if you get the markets popped up, pulled back, pushed up, and you get quite heavy selling pressure down, when it gets down to here, that's sort of your anchor. That's pushed right down to your anchor, but your stochastics are still hovering around that oversold, that overbought territory is just starting to roll over. That's not a good sign because it just shows you that there's really who's left buying. No one's left to pressure the buyers back up again. So that's a different scenario when you're getting the market, the stochastics are hovering around oversold. No, that's not even good, is it? If it's hovering around oversold here, that's not a bad sign. But if it gets to the anchor and it's not anywhere near oversold, then it hasn't taken much pressure from the sellers to push it down there. All right, I hope that makes sense. Hmm. No, I agree because you got to remember everyone does their first learning from books and the way you use stochastics, or anything. Everyone gets obsessed with what do you call them again? Indicators. That's the word I'm trying to think of, and how to use them. They're taught by a book, which everyone knows is out there. So all that information we all know. People use. Okay, when the MAs cross up, then you should buy because the trends change to going up. The pros will out there. They'll be buggering around. Well, if they agree with you, okay. If they're buyers too, so be it. But there's going to be times when, for every time when you bought it and you've made money when it's crossed up and then it's rolled over and you sold it because it's crossed down, you're going to get chopped to pieces. And other times when they just crosses up and down and up and down and up and down, and you're going to get crucified because by the time it's crossed up and you bought it, you're generally going to be buying on a high. Okay, so I think there's a lot better ways to use any sort of indicator. I like stochastics. I like using it like that. MACDs, you can just a similar sort of thing when it's when it's going up. What is it, above the zero line, buys and control. I don't like using that as much now. I'm more of that. I like this stochastics. But yeah, just remember the pros can. It gets down to support level. Yeah, people they'll wash it out and then it'll pop back up. So for me, I'm always looking at the price action and higher lows, lower highs, just to work off. Because there's no doubt about it. When you get a higher low, it's showing you that buying interest is stepping up. And lower highs like this, it means the sellers are starting to step in. You know, there's not much to say about that, I guess. Yeah, I mean, I've probably, I know Helen's been around for a while, and there's probably a few people in here. You go through and you try to find what's the holy grail of indicators. How can I use those? And if I get a few of them in conjunction, I'm going to get the perfect signal. There is no perfect signal, nothing at all. The perfect trading is to get 60% right out of your 100. Strike rate of 60% and get 2 to 1 each time. That's what trading's about, and just stick to your edge in the market. And my edge, the way I look at it is the way I use stochastics and price action. Everything's based around price action for me, and a helping hand from stochastics occasionally, and EMAs, your 20 and the 50 moving averages. That's what I'm using. So it's pretty clear if you pull back to the averages and they start heading higher again, you've got your high lows. Stochastics have gone from overbought to oversold. Okay, the trend is going up, and buy off a high low. And off we go. No, look, yeah, look. I think what you said is it Magyar. Um, oh, look, there's you just got to find a little niche that suits you. But I think price action is one thing. If you can get a bit of a handle on that, just stick in the stream, getting onto our. If you don't know, we've got the Discord, the chat. Get a few people jumping in there. Ask some questions in there if you like. Someone will answer it. If Helen's in there quite a bit to answer, a few others in there to answer. No, Zeng's in there to answer as well. Give an opinion and try to learn that way. All right. I hope that makes sense. Just what I'm talking about there. Now let's get into. Well, we had something else, wasn't it? Gold finding resistance. 1310. Watching for the next move. You mean support? Is that what you're saying, right? Ah, okay. So gold has pushed off support, hasn't it? Flight Center. I know Helen popped this up into chat. I'm on the weekly. Not on daily. What chart did you have it on there? I'll shut it down. Helen, on Flight Center. Yeah, just look at this, guys. This is probably. I just want to chat about a good example. I can bring that up. I'll draw it up actually. I think Helen was saying about Flight Center potential change in trend, potentially rolling over. And this is where you just got to draw your zones up. So you've got support zone here, higher low. The market's gone 1 up, 2 down, accelerated higher. So and you can see it sort of bouncing through here, low, high, low. So that's a lower high there. Bounce around, held that low and pushed up, took out this lower high. So okay, the market's potentially heading higher, and it took out this level through here as well. Pushed up. Of course, you're going to get, when it starts getting a bit overcooked, like we are in the stochastics, it means that we need some fresh buying to come back into the market. We need to squeeze out, put some of these guys or some of these traders that are bought late into that move up back on the sidelines and ready to go again, ready for the next move up. So that's what the market's got to do. It's got to bring in some buyers, squeeze them back out, bring in some buyers, squeeze them back out, and potentially bring in some buyers again. And this is how I'd like to use stochastics. You can see that we've gone from oversold, or potentially oversold here. And that was good divergence, by the way. Got to overbought when the market's breaking out. It's got to wash out some buyers. We've gone back to oversold and then accelerated higher, took out the high. So that move between oversold to overbought, by the time it got extended again, it's well and truly into new highs. Okay. Then we've had that pullback again, overbought to oversold. But then we've gone as far as we can get. We've pretty much gone straight back up, right up to that resistance zone. And it took a lot of effort to get there. So we've gone to oversold, unlike this move up, and we've run headlong into resistance around that 59 mark. Does that make sense? the way, just viewing that. So you know that when you're going to come into a resistance zone, you potentially there is potential for people to take off, especially if the move look like it's running out of steam. So when the market gets from oversold to overbought, like from oversold to overbought here, if we come up into resistance and we look like we're running out of steam, which it didn't hit, it just went blasted through it. If it blasts through it, then so it's a strong market. There's nothing around it. But if it gets up into that resistance zone, it's taken a lot of effort to get there. And we're in that oversold market, and then we just start to struggle. There's a good chance that it's going to get some reaction off that zone because sellers are not going to want to give up, especially if someone that's bought it, say, just in here around 55 to 56. They don't want to give up any profit. They're sitting on the table, especially if they're the next target, especially when you get that double top. If you start getting from here, push up, pull back, hit that over, and we start to come down again, and then we build that lower high, then the market could start, it'll attack this 52, potentially down here. You don't know where it's going to go from there, or just have a good little correction to start, resuming that trend up. Does that make sense to what we're looking at there? And I hope you're looking at the same thing, Helen. I hope that's what you're talking about. I'm pretty sure it was, wasn't it? Oh, yeah, that big volume. That was in that move up. So it's good push up, big volume, pull back, lighter volume there. Okay. Yeah, so for me, just what I'm looking at there, I wouldn't go anywhere near being buying it just yet, purely because of what I see here. Now, if these stochastics were, maybe around 50% when it was hovering around 59, that's a different story. It hasn't taken much effort to push it to resistance. It can easily pull back and then boom, blow straight through it. Away we go. But for me, it's all about levels, what level you're coming into, where you're sitting at, and what sort of effort has the market taken to get there. So when it goes from overbought to oversold, that's you can think of it as a finite number of buyers to push it there. Now, if it say there's 100 buyers to push it up here, 100 buyers bought all the way up, they've smashed it through that last high. Okay, then we've had a pullback. It's taken pretty much from overbought to oversold to overbought with this rally. It's used up those 100 buyers. So if there's no more buyers left, who's left to push it, push it up through resistance? Um, does that make sense, guys? So that's the way I'm sort of trying to analyze my markets to see what efforts taken to get up into a resistance zone. If it's up in the clear skies, that's a different story. The markets there's nothing to run into. So there's always going to be those FOMO traders, the fear of missing out traders that are willing to buy at new highs when the market's stretched. They don't want to miss out. It looks like it's going to go to new highs. And then when it starts coming back on them, they start thinking, okay, I'll hold this longer term. There's all sorts of reason not to close out. Sooner or later, they get squeezed back out of the market. But when it's into new highs, it's a different sort of a scenario than when you're coming into a level. Because you come into a level, you sort of expect a reaction off it, potentially, or you just want to see. So you're sitting there waiting to see what happens. If we start reacting off it, then, okay, maybe it's time to reevaluate. 30, 30, 30, 30. Yeah. All right. Yeah, the capitulation on higher volume. All right, guys. Did we have anything else? If I missed something, let me just go back. FL2, we've gone through that. Did I get through everything before? THC, APA. All right, let's get through those two. All right, if I'm looking at APA, let's get rid of that. Yeah, to me, that's a bit messy. It's not to say it's not, it's not trending. So we're on the weekly now. Sure of it. Yep. So you got clear a resistance through 975. The market's pressed up, reacted off it. Buyers were still in here, ready to push up. So the anchor for this move, probably not. Anchor's just here, isn't it? So this is a funny one for me. I would sort of call that the anchor to move up, this move up. It starts to accelerate. So you've got this big, powerful move up, a pullback. It hasn't really taken out. No, actually, I lie. I would call that the anchor. I'd say that's the anchor to move up. So it's popped up, essentially a double top with a bit of a washout here. Corrected lower just to clean out some of these late buyers. Pushed up, pulled back. Buyers are stepping in. It looks like buyers are stepping around 8. It's had another go. Take out this high all the way back. Buyers are stepping, still continuing to step in. So sooner or later, one side's going to give. And you've got this recent push up here, a pullback, held the high low, pressed up into that resistance. Again, it's run headlong into that resistance zone. So this is your first time it was playing up here. The second time it can't get through. Anyone that's been buying it through here, it's a double top. You've got your double top in play then, especially when it pulls back, green candle, bang, straight down again, takes out that. That's your lower high just in here. So that way, that sort of price action, you can see what's happening here. If anyone thinks it's going to get up through that 975 or up through $10, it's got to pull back to reset to bring in those buyers. Come to an area where buyers are happy to start buying it again, and you can see this big move down, taking out this $8 level, has cleared the way. But then what we've done from here, we've reacted quite sharp, straight back under. So this is the third time we've come up and failed at that level, and then we've had a good move down, back off that 7, push back up to 925. That's a key. That's more of a significant lower high than this little minor one that we just mentioned before at around 950. That's a significant lower high, and it's confirmed when we push through $8. So from here, I don't like this on the buy side, and it's just taken out that $8 level. If we go down to the daily just to see the price action, you know, that's trending lower. You've got lower high, lower high, lower highs in play. It could potentially it could try to consolidate through here. The buyers are trying to give it a dip around 8, and it could just easily roll it over and squeeze them back out again. Consolidate, then boom, straight down. And if you go back to the weekly, then weekly it could be heading down to 7, 725, or take out this low again, because don't forget it's 3 times up at that high. It struggled and it's built a key lower high. All right, so for me, I'd just be watching this one for now. I'll just be standing on the sidelines. Just if you're looking to buy it, weekly MAs are down, your daily MAs are down. There's not much going in its favour for me. What was the other one? OPA, THC. Boom. All right, THC. How will you get there? It's just dropping out, is it? I said some really good stuff there as well. uh, uh, all right, so this one here, I wouldn't be touching it just yet. And this is quite low. By the looks of it, doesn't trade a lot. There's not a lot of volume going through here. You don't need to go to the weekly at all. What is this called? The hydroponics, is it? Hydroponics company. That's interesting. All right. So with this, that's floated. I don't know what it floated at. Say around, give or take, 40 cents. Obviously, get that first wave of selling. Whoever's bought it, it could have been the IPO price is 20, come on at 40. People taking profit, doubled their money. It's come back down, edge back down. Then you started getting to lift. Maybe a bit of news started triggering. And you got this big move up. I'm guessing that's more than likely going to be news driven. Thanks, Alan. And then you've got big reaction, which you're going to expect when you've got a move going from what 30 to $1.10. That's about a 300%, 400% move. There's bound to be a good solid reaction sooner or later. You got that big reaction, and then anyone that potentially is trying to buy it on the way up and missed it, that's what you get that reaction back up again. But it's falling short of that $1.15 highs, and then we're starting to see this edging lower. All right, I mean, that's not so bad, that move there. You're at a key level here. So if it doesn't lift off here, I wouldn't be touching it. I mean, it could easily, and by lifting, I mean high or low. I don't mean just by, okay, buying it on the third candle break. Um, there is a style, I don't use it as much now, but if the market's moving down and then you've got this break, it's probably around here. Oh yeah, so give or take. A lot of people look at the individual candles. To me, that's not a strong enough entry off that zone at 70. I would much rather see it. So we've got this pressing down into that support. We haven't really reacted off there. We got this little pop up towards 70, but that, to me, it's not really a reaction up. I want to see a good reaction up, maybe 70, 75. You can see if we get to 75, ideal, because then it's early warning signal that we're breaking up out of that contraction lower or that move lower. And if we get that, try and draw that up from here. Actually, I just want to draw that. If we get this type of price action, it comes up, breaks up out of there, and then we get this move lower to build a higher low, especially if it's in two legs. So you got 1, 2 legs lower. What you've got, and especially if it's oversold too, if the stochastics at that stage, just when it's starting to grind lower, get into that oversold territory, and then we start to lift, that's what I'd ideally be looking for. And then you could sort of use this same larger price pattern if this is what plays out. 1, 2 moves down, break up, potentially up out of contraction. 1, 2 moves down, start to lift. Then you could probably buy, a bit different setup than just off a high low break like that. Your traditional, you could buy a bit earlier because then it's highly likely that the market is coming up out of contraction. You're going to get your higher low, everything's starting to fall into place, and then I'll be ideally looking to buy it. And you can see the stochastics on the daily are it's well and truly in the oversold territory, so it's taken a bit of effort to get it off 60. But until we see this type of price action, I'd steer clear of it because it could easily push up and then boom, straight back down again. Especially if it doesn't break up out of that contraction, we get more of this. If I can draw it from here, push up, push down, key support. You've got this, it pushes up. I wouldn't just be buying it. This is where I'd never buy purely off support because people do that. They'll buy a support. Okay, 60 is good. It's oversold. This is why, it's another reason why I wouldn't use my stochastics like this, just because it's oversold. Buy it purely because the stochastics oversold. It's at support. Buying it off support, it could easily pop up and then straight back down and just continue. So really, that provided no support at all. It's just reacting off that zone, bang straight back down. It ends up at 20 again, and then you just sit and hold it for a few years. Does that make sense, guys? So all that type of price action, this is what I'd ideally be looking for. And a good heads up would be a pop up through this downtrending resistance line. And if you don't get there and then start to roll over, you could still work off a higher low, but there's still probably that residual of selling that could step in and just really ruin your day. All right, I hope that makes sense, guys. I just realized what's going on. We lost him again. Bloody stream. All right. We'll probably have to call it a day there, guys. If there's something that you've missed on this because we're dropping in and out, just shoot me an email or get on the Discord. We can have a bit of a chat. We'll probably talk about it again. And just remember, I think you can go into the chat channels where I can just talk. I'm not sure if you can hear me or not, or whether you need headphones to hear, or if you can get it on speakers. I might be able to chat in there a bit rather than just go back and having to type everything. We can have a good old conversation. All right, probably call it a day there, guys. Thanks very much for joining me. I hope a lot of what we talked about makes sense to you. There's only a lot of people can easily find support, resistance, all that sort of stuff, but for me, it comes down to entries. Everything's about entries, and if you find something that works to you that makes a lot of sense to you, and then you get an edge in it. What I mean by edge is that you're getting a 60-40, 70-30 return. You don't have to get 60-40. It doesn't have to be. It could be 50-50. But if you're getting 50 right, 50 wrong, it can be bad if it's a 1-2 win-loss. But if it's a 2-1 win-loss, that 50-50 net, you're making money. And that's all you really care about. So if you're finding that edge that works for you, your entry signals that work for you, just stick with it and try to refine it. If it starts to get a bit messy and it's not making sense, maybe work on something else. But to me, anyone could look at support resistance pretty clearly where you're coming into support. How it's getting oversold here. It's in that zone at 60. But the way you attack the entries could be the make or break. All right. Thanks for joining me, guys. Any questions, feel free to send through an email to support@tradesetup.com.au, and we'll just go from there. Cheers, guys. Have a great weekend. We'll speak to you again soon. Cheers, Helen.